FX. In today's video, we're going to talk about how to catch every move in the Forex market by simply reading supply and demand, and by simply reading supply and demand that fails to mitigate your supply or demand zones. Okay, so all in this video, you guys, so stay tuned. All right, so you guys have probably seen this if you've been trading for a while, and you're seeing how the behavior of the market works. Okay, so let's just say, for instance, when price is bullish, right, and what we're anticipating is, as traders, is when price breaks a high, we want price to fully mitigate, just like this, right? And we all know too well that price doesn't always give us the break and mitigation process or behavior just like this, right? But rather, price just does this. Let me just do this, something like this, right? And then price just starts doing this, right? And it doesn't come back at all, right? It doesn't come back to this low, and it just does continues to do this, right? And then you kind of stuck, right? You're kind of thinking to yourself, okay, well, price, I guess price may not come back here ever again, right? Excuse me, that was weird, right? And it just, from here on out, it just continues, runs like this, bullish. And you're thinking, well, I'm wanting price to get back here, and I just waited this whole time, and maybe for a couple of hours, maybe a few days, maybe weeks, whatever, or days, right? So in this video, I'm going to show you guys how to catch moves simply by understanding supply and demand, and you don't necessarily have to wait for price to continue to fully mitigate price like this, right? A high and a low, right? Mitigation, high and low, mitigation. Same thing for the bearish perspective, high and low, just like that, right? To catch every supply and demand in this perspective, but rather catching it when price actually does break, fully mitigates maybe, right, and then starts to overextend, and then you're thinking to yourself, well, what's going on, right? It just continuously does this, and you've been waiting for price to get right here to this demand, right, or something like that. So let's talk about it here. I'm going to show you guys some examples. So for instance, let's look at here. We're on gold on the 4-hour, and you can see here, this is where the next demand zone is, right there. So let's just say, for instance, when price, we would wait for price to get here, obviously, right, on a long term perspective. So we're obviously waiting when price has mitigated this demand, price ran, we're waiting for price to get back here again, for price to continue bullish, right? But what if you didn't want to wait for that, right? Notice how price here has overextended, right? And when it's overextended, price retraced and then continued bullish, right? What if we wanted to be a part of all this momentum, right? Of all these lows and highs in here? Well, you can do this by simply understanding how price works. Again, right here, actually, let's go start from here. Here's where supply has ended, right there. And then right here, you can see where there's a sell, right? You can see right here, price sold off, but then bought off again, right? So in here, this one will actually be a little tricky, but here is where your next buy would be, right there. Now, obviously, we're on the 4-hour. I'm going to show you guys what I'm talking about right here. Let me just break this market here and do this. Let's go right there. Okay. So it's simply by reading supply and demand. There's some supply, right? There's more supply that came in. Price came up and pushed bullish, right? So in the instance, this would be our area of interest right here. Right, we would look for buys right in here because price came in, pushed to demand, came back to supply, back to the demand zone right here, and this is the area to look for buys now, right, to start buying from. Okay, now price is fractal in so many ways, right? So you won't just be looking to buy here and then say holding all the way here to this high, obviously, because we understand that when price has broken this internal high here, price didn't mitigate fully, right? Obviously, we know that we're fully in the premium side of the market, so this is one thing you obviously need to be always cautious about. But now what I'm really interested in seeing, can price here, can supply fail and demand take over? And if it does, then I'm interested in adapting to structure now, right? This is how you can catch every move in the market, by simply reading supply and demand, right? So let's watch this. Because we understand that this is a low and a high, the demand is pushing bullish, right? All I want to see right now is a buy biased market. I don't want to see supply or sell biased market. I want to see buy biased, right? If you're trying to keep both in your mind, saying, okay, I can sell here, but then maybe I can also buy, then you're obviously going to get your bias direction wrong. What we're trying to fully commit to right here is to see the direction, okay? And we want to stick to that direction, which is either buy or sell. So in this case, I'm sticking to a buy. So let's continue again from the 4 hour. What we can fully see here is price is pushing bullish. We see that there's internal supply, right, coming in here. Right now there's demand coming in, right? You can see there's order flow pushing bullish like this. And just so you guys know, this is the 4 hour, right? So obviously we can jump inside the 4 hour internally down to the 15 minute to the 1 minute, okay? So let's see, my job right now is to see how supply and demand is interacting with each other. If supply fails, right, and demand takes over, I'm taking a buy from here, right? So there you go, there's supply taken over, at least that's what it's trying to tell me, right? But I know good and well that we're buy here, right? You can see there's order flow going on here. Let's go down to the 15 minute right here, okay? And here we can see this was the last supply take that took control. I'm going to mark this my supply as a supply zone right there, right? Because gray is my supply and the blue is my demand. So I'm going to do that, right? So now we know the last supply that took place was actually in here. Last demand that was here, right? Right there. And this is the last failed supply zone. And what I mean by that is this is a supply that turned into demand, right? So when I refer to things, say something like this is the last failed supply zone, or the last failed supply, right, is right here, and the demand took over. So now we anticipate for price to get back in here for the buy, right? Right over here, price is tap, right? And this is now where we're looking to buy from, right? Now, obviously, you don't have to buy aggressive here. Obviously, you can wait for, you can either do this, which I love doing, which is placing my 50, my Fibonacci's like this, right? Or you can just double tap on your a zone like this, right? I believe this is this tool right here, right? And you can just highlight that middle line like this, and then it'll highlight the middle line automatically for you. For some reason, I just like doing it the old school way. I don't like to have middle lines here all the time. But anyway, it's marking out your 50 EQ, right? And you could obviously say to yourself, okay, I'm entering here at the 50, leave your risk just a bit below, and then start targeting the high. Now again, I'm only telling you guys this because I want you to understand how to catch every supply and demand move in the market, rather than just waiting for something like this. Waiting for price to come here right after maybe say a week or two, right? Because price was running, we're waiting for price to get back here. This is the 4 hour chart, and every price builds every every candle builds every 4 hours, right? So this is if you're obviously an intraday trader as well. So let's continue back down to the 15 minute, right? And right here, you can also see, now we can try and actually catch the next move. There's where your last supply was ended, right? Let's just, for all time's sake, just put this here, right? Because I do this a lot where I just enter aggressively because I'm only reading supply and demand, and it works for me a lot. Now, let's get rid of this, right? I'm going to show you guys something cool. Internally, you can also see that there's more a failed supply there. So this would be another entry right there. We can start adding on more positions in the market, right? Now, you might be asking me, well, why are you only targeting this high, right? Why don't you target, like, say, this high or this high? Very good question. That's only because price is still bearish here, right? You can see that this supply here, this high, did not break the low. So therefore, we're bullish, right? And you can see order flow is bullish. And obviously, on the higher time from the 4 hour, everything is bullish here as well. So that's why I want to target this high at minimum. Of course, I can target everything here, but what I would do normally is when price gets to these supply and demand zones, like this supply, and we see price interact here, what I'm typically looking is for price to sort of to give me a failed reaction, a failed supply to demand. If I see that, then I'm all in. I'm all in on this trade, right? I can also take partials if I'm not too sure about this supply zone or about this area. But in most cases, I would also see how demand interacts with supply over here, right? So the only interaction that we are only looking for is if supply is failing or if demand is failing. That's the only interaction you're looking for, supply and demand. And a lot of people don't teach you that, obviously. Now, I know I'm going off a little rant over here, but a lot of times everyone's telling you, look for where supply is, right? is supply greater than demand, right? And you'll be selling either at this supply or you'll be selling at this supply, right? But anyway, so without this whole entire rant, let's continue here. So this is where I would look to buy next, right there. I would also buy here now too as well, because this is my next supply zone. So we can continue adding on positions. Now my job again here is to see how supply and demand interact with each other. Notice here how there's supply that happened, right? If this supply doesn't come and mitigate this previous supply, or this demand here, excuse me, then if it flips, I'm going to be now taking on the next move, right? I want price to get here. This is my next area to buy from, but if it doesn't get there, let's see if it does. Okay, there you go. Okay, so I'm buying from there again, right? I'm adding another position. So we just added 1, 2 right there. Let's add another one there. Okay, because we just entered from this one as well. And let's add another one here. This would be at the 50. Obviously, I would take my Fibonacci's, span it across there. Notice how the 50 is tapped, right? And this would probably be another video on another video. And then we'll talk about why I do the 50 and how I do the 50 exactly, how I mark out each supply and demand zone on risk management video. So let's continue. So there you go. Price continues, right? Okay, so the next buy would be right here. In fact, I would want this supply right there to be tapped. I normally wait for the 50, but you can also take this one. This one right here is probably some sort of inducement that's inducing us to take buys earlier on from this demand zone, and price could fail and continue and just do this, right? So let's continue watching. Again, what I'm more interested in seeing how supply and demand interacts with each other right there. So this is obviously a big supply right there, a big supply zone. Price tapped the supply zone. We're wanting to see, we want to buy right here if price ever gets there, right? So like that. Let's position ourselves there. Let's target this high. Let me just zoom in a little bit for you guys to see. Okay, and if price doesn't get here, I'm just going to apply another position right in this sell to buy position. Let's see what happens. There we go. So it never came down. Obviously, I was watching this where price sold, price bought, came back in and took off. But let's just say for all time's sakes, I didn't catch it, right, just to show you guys. Okay, here's more supply to demand. So my next position is here. Let's see what happens. Okay, there's my next entry. There you go. It tapped my other supply. So this one was MIA. Let's just delete that one because price didn't get there. And then we just apply price to this area right there, right? So just like that. So I would target that at minimum, right? And again, I'm saying this at minimum. This must have been news releasing. So if it's news, right, I'd most likely get all this move here as well because news just starts running. It doesn't stop, right? At minimum, like I said, target this high and secondary position here. Second target would be there. Third target would be right there at that high. But again, right? See how we were able just to stack on trades on entries just based on understanding how the market works on supply and demand. I was on the 4-hour here, right? And I'm only intraday trading, and that was only that whole entire day or whatever, however long this day was, right? But I didn't have to wait for price to get here, right? But the same thing applies on the 4-hour as it did on the smaller time frame, right down there. We wait for price to fully, to come and mitigate demand zone, right? And we can just wait nice and pretty right here for price to continue bullish. So I just want you guys to see that again, right? So let's continue from here, right? If I was on the 4-hour time frame, what would I be doing in this case? Well, let's just say this would be my next demand zone because now we see that supply failed, right? And the way we see supply failing is from this. Supply failed, demand is taken over. We're going to go run off bullish from here. That's my anticipation, right? So let's continue here. Notice how price gets into my 50 yet again, right? By this time, I'm going to be a millionaire, right, guys? Just a little joke. It's not a joke, but I'm actually looking to become a millionaire. Anyway, and that's just nothing to rub it to anybody. It's me just being humoristic here, right? So let's say I bought here, right, on the 4-hour, right? Where would I be most likely looking to target? I can look to target the supply zone right here, right there and this is just for safety, right? This is to be safe. I normally like to target the outer part of the zone, not the internal part of the zone, right? Leave your risk a little bit below, right? And this is only if you're entering on the 4-hour, which I don't recommend it, obviously. I use only the 4 hours directional base. We can split this also. You can do something a little fancy here where you could, let's get this risk to reward tool, right? Do something like that, right? Maybe split your risk about 50% of the way. And now we can tell ourselves, well, hey, what if I'm happy just to target the 50? Because if I'm actually targeting the supply zone, I might as well just target the 50, right? Because price goes into the 50 more times than not. So let's continue to see what happens. Okay, boom, there we go. So we were just as anticipated, price did tap the 50, and price actually rejected there because there was supply there, right? So now this would be what, 4.5%. This would be great, right? A good little entry. Now again, why did I enter there, guys? Right? It's because simply understanding, I'm reading the internal supply and demand and how it's interacting with the previous supply right over here, right? We wanted price to get here, but it hasn't, right? And there's nothing to worry about because everything is not a bulletproof method, but what it is bulletproof in a sense, and I like to always say this, is when you just simply read supply and demand, right? And by anticipating when price gets to these areas. So let's say, for instance, if price actually gets up to the extreme supply right here, right? Am I more interested in buying or selling up here, right? I'll give you guys a second to think about this. Am I interested in buying or selling there? Okay, so whoever said sell, okay, well, good luck. You know, you might have just gotten ran over because demand has taken over. So I wouldn't be selling here. I wouldn't be selling here. I'd be looking for buys, and the way I would do that by simply seeing how supply and more supply here interacts with each other. If supply actually fails, then I know demand's in control. And why wouldn't I want to be buying when the rest of the market is buying, right? So that's just a little something for you guys to see how I'm anticipating all this. A little easier than not, right? Because I've been in the game for quite a while. Now, let's just say here on the 4-hour, right? I want to end with this. On the 4-hour, as you see, we were anticipating for price to come here at the 50, and we just bought there, right? I could easily just go down the 15 minutes, right, and apply the same thing over and over. Why? Because the internal structure has to, I want the internal structure to give me what the main structure is doing, right? So I'm looking for buys, not for sells, right? That's as clear as you need to be in your head right now. We see here there was supply, right there. More importantly, I would actually mark my supply from here to here, right there. So now I would actually see that we have this failed supply zone right there, or this failed candle, right? This is one of the ways you can actually start looking at your order block a little faster. Let's just zoom this out here. Not zoom it out. What am I talking about? I mean, decrease the size in this risk to reward zone, right? So this is where my entry would be, right? Now, sometimes the wicks do come below the zone. It is just a given, right? That's why you can see why I leave my risk just a bit below the zone so price doesn't wick me, take my stop loss out, right? I would target the high there, right? Or at least the 50 right now. Your risk becomes a lot more smaller, right? And you have more profit. There's 18.6% there. This is 4.5% right there, right? So, and now we just continue stacking on all the orders, right? We see this is where the last supply to demand took place, right? And this is where we want to be entering next. Price didn't actually get there to the 50, no biggie, right? You can see how, again, supply failed, demand took over, and then I'm going to be going back in on here, tapping the 50 to continue price bullish, right? This is how you can catch every move in the market in supply and demand. Something like that, right? Leave the risk right below just a bit there. Maybe I can expand this a bit bigger, just like that, right? And then you can actually highlight this whole candle if you want, just like that, if you want, or you could do something like this. Just look at the main wick, right? Boom, right? And then you can just do that. Notice how the wick actually goes below our risk to reward zone, right? Boom, there. And that's at minimum. That's all you need to be risking, guys. Nothing more, nothing big, nothing extravagantly huge like this. You don't have to be down like that. and then doing like something like this, right? Now this is where a lot of amateur trading comes into play, right? Where a lot of people just enter there and then just go put their risk down here. You don't want to do any of that. You just want to simply risk this much in the market, and that's it. The whole point of trading is to risk as little as possible and to gain as much as possible, right? And notice how the risk to rewards become just extravagantly big, right? 16.5, 18.6, right? We can continue doing this on and on and on, right? Now notice here, I'm looking for price to get into this supply zone, this demand zone, excuse me, this failed supply. That's what I'm talking about actually. But price doesn't actually get there, and that's okay. Just as long as you start reading what price is doing in here now, right? If prices are going sideways, don't think for once that price is going to always give you what you want, where price comes into the supply, into this demand zone, for example, right? We want to start reading where price is doing, what price is doing with the previous supply zone. So right in here, this supply reacted with more supply in the far left, right? And now the internal side, you can see here. Notice where, actually I probably don't have enough data on this, but let me see if I could get some more data on this right here. Let me just cut this off here, go on the 5 minute. Can I go on the 5 minute? Yes, I can. All right, right here. I see right here there's supply, came down, broke the slow, right? So I wouldn't be interested in buying just yet, right? A lot of people would say, okay, well, hey, just wait for your chalk boss, whatever, right? And then just enter right there, right? I don't do that. I go in second. I don't always go in first. And the reason for that is because I'm always hunting and I'm always preying on the weak. I'm always preying on the weak on trading. Wherever there's weak supply, I'll take it. Wherever there's weak demand, I'll take it. So let's look here. There's full demand, right, going above, right? Supply went below, took liquidity. Demand took over, took liquidity, right? But now I'm just starting to look, where is the weak demand, weak supply? Here's weak supply right here, right there. Why? Because we just simply see that supply, this high here, failed to break the low right there, and prices are flipping now, and this is my flip, right? And so now I would be more than happy to look to target here, right there. Notice how I highlight my zone, right? Here is the entry. The entry would have been there. Risk would be just a bit below, right? Just to cover my tail, just in case, and then to target the high. Let's see what happens, right? There we go. Now, if I'm too uncomfortable to enter there, I can, of course, look to enter right in here. Again, here's my supply, right? There was supply, right? Failed supply to demand. I could look to enter off of this failed supply as well, right there, and then enter there. Boom. Risk just a bit below, right? Catch these two trades, and now we can hold price to the 50. Let's go over here. Where is it actually? There it is. Right here and right there. Now the risk to reward becomes huge. 11.7, 26. Woo, guys, 26, right? Let's play it here. Let's see what happens, right? Okay, price tap the front of the zone. Boom, there you go. That's all you guys need right there, right? So notice again how you can catch every move in the market by just simply reading supply and demand. Internally, this is the internal supply and demand, right? Versus the external, which is the 4 hour, say here, right? Just like that, guys. Now, I know I make it out to be so easy, to look so easy, but again, guys, I'm being honest when I say this. It is challenging. This is challenging work. It's not easy as it looks, as I make it out to be. It's just easier for me in my eyes because I've trained myself for so long in this, right? A lot of times when people are showing you this stuff, right, it can be just some sort of fakeness through other people. You know, I don't know. I can't speak for others, obviously, but I'm just saying this because when I've started out, I've seen a lot of videos on YouTube too, and scouring the internet for the correct way to trade. And a lot of times there's a lot of BS out there, but I will say this again, that everything you're seeing here isn't just simply 1 day's worth of work or one day's worth of training. It took hours and hours and so much work to achieve what I'm doing here, right? But then that's the beauty of life, is that life gives you ease when you have sweat, blood, and tears, right, for this. So anyway, guys, I don't want to bore you with what I'm trying to tell you guys. I hope I'm not boring you guys. But anyway, in this case, I hope you guys took away some value of this, how you guys are able to actually take control of supply and demand and take every move, take advantage of every move. But realistically, guys, I just want to say this is what you would be doing for the rest of your life if you know how to trade this. And obviously, if you enjoyed this video so much, please put a thumbs up on this video. Please go ahead and give us a comment on this video. See how we can help you guys, because we're definitely looking to help more people, more students out there, and joining the Royal Blu FX family. Until then, guys, I will see you in the next.